Hey everyone, this is Jordan and this is your precious metals video market update. Today is June 30th, the last day of the month and the last day of the quarter. And this is going to be a short video, and I just want to talk about the COT I'm just going to look at gold and only gold. And there was some hubbub over the weekend about the huge increase in speculative positions and how this is a bearish omen for gold as well as silver, because we saw the same thing. But I think there's a misunderstanding out there of this report, and this is not a timing indicator. It's a sentiment indicator. I mean, it's not a timing indicator because it doesn't, when commercials cut their positions, I mean, that is not a sell signal. There's other things you have to take into account, and some people are saying the commercials are always right and the speculators are always wrong. That's really not the case. Now, looking at this chart of gold going back about 12 years, I highlighted times when speculation actually had a small decrease, or at least it wasn't rising. So you could see those two instances there. But the interesting thing is, most of the time when speculation is increasing, the market is going to go higher. So that is something we have to keep in mind, but also the fact that, as we see here, it can go both ways. So you can't just look at something and have a knee-jerk reaction from it. Now, so what we've seen in the last couple weeks is a big increase. We've seen huge short covering, and I'll mention a little bit later. Last week was the first instance in a while where we saw gross long positions increasing. Now, the reason, in my opinion, this is not worrisome is because it's originating from a low level. And up until recently, the speculators have basically been bearish on this market. They've actually been right most of the time. And what we're seeing now is they're throwing in the towel. They've covered their shorts, and now they're buyers. And that's what we saw with the increase in gross longs as far as the last data that we got. And you can see that the net position here as a percentage of open interest, in the last couple of weeks, it's gone from about 17 to 34, 35% or so. So it's a pretty big increase, but again, look where we were at the beginning of the year. There was basically no speculation in the market, so it's been increasing, and gold has been increasing also. But to get back to my point, I mean, this has gone from 17 to 35%. Okay, if it went from 40% to 60% or 30% to 60%, that would be worrisome, because it would be originating, that increase would be originating from kind of a medium level, and then it would be going to an extreme high level. So, I mean, that's something that we don't see right now. We don't see that yet. So there is room for speculators to continue to increase their positions, and that would be bullish because that's more people buying. And, more people buying, less people selling and shorting, etc. So from where we are now, at least over the weekend, I thought this was a neutral report, because when I saw the big increase, I would have thought that the price of gold and silver would be higher than where they are. But we sit here today, and gold looks like it's kind of breaking out above 320 or 1320 to 1325. That's a key area. But last comment on this chart, I mean, look, just so to remind you that you can't have a knee-jerk reaction, that this can go both ways. Look at what happened at the end of 2009. The position was almost at 60% or so, and that, I remember at the time, that was worrisome. Gold was close to breaking above 1,000. Well, gold ended up breaking out, and what happened was speculators actually did not increase their positions over the next couple years, yet gold was still able to rise substantially. And what we see towards after summer 2012, when we had that peak, it looks like it was about 55%. I remember thinking to myself, well, we were at this level a couple years ago, and gold kept going up. Maybe this isn't bearish. Well, what happened, as you can see, is speculators aggressively were cutting their positions, and they were right. And so speculators, since the end of what looks like, since the middle of 2012, they've actually been right. I mean, their positioning has been, I would say it's been driving the trend, but if you don't want to say that, you could say it's been coinciding with the trend. And so speculators have been right recently, And that is not a problem. It's not bearish in my opinion unless they have a big long position, which would indicate extreme bullish sentiment. And we just don't see that because we're below 40%. I mean, if we get above 50, we get to 60%, that's when you need to worry. And what we have here, this is the gross short positions in gold as a percentage of open interest. And this is one thing that has been driving this little recovery, a lot more so in silver. But as we see here, there's been a big decrease recently in the last 2 weeks from about 36% down to 23% or so. And we can see that this could come down to 15% or 10% very easily. I'm not saying that's going to happen, but I'm saying there is potential for further short covering, which would lift gold. And if gold can just get above the 1325, 1330 area on a weekly basis, which now it looks like it's going to do, there's still a little bit of short covering left that can push that higher. And as we know from the last report, the speculators have increased their longs pretty aggressively, and that was initiated from a very low level, not a high level. So that is a potential fuel for this market to break higher, probably retest 1400. And in addition to that, as I've mentioned, in the last couple weeks, the stocks peaked before the metals. The stocks have been leading the metals higher. The stocks are very strong today. They're closing a very strong month, a very strong quarter, which I talked about in the last week. It's a very good sign. I mean, looking at the monthly charts, if you just look at the monthly level where GDX, GDXJ, SIL, etc., you look at the monthly level where these things are going to close, it's actually at a 10-month high. So they're going to close above the February high. And the quarterly close, I think, is going to be the highest in 5 quarters. So these things are very bullish. The stocks are showing a lot of strength. It looks like the metals, are particularly gold, starting to get going a little bit. That's the way I see things. Hopefully this was informative for you. You don't need to freak out about the COT report, not yet. That's all for now. You can sign up for my free newsletter. Go to my website, put in your email address in the top right corner. You can email me if you have any comments. Let me know, jordan@thedailygold.com. Thank you very much.